Next, we'll have a panel discussion session on Fintechs' role in the post-pandemic society. We're pleased to welcome our moderator for today, Mr. Danny Leong, Strategic Advisor at Moonstone Advisors and Ventures, and our panelists, Mr. Wong Wai Ken, Country Manager of Stashaway, Mr. Wong Kam Meng, Co-founder and CEO of Funding Societies, and Mr. Hak J. Kim, Head of Product and Solutions Malaysia of Visa Worldwide Private Limited.
Good afternoon, everyone. Welcome to the Data Asia Conference. My name is Danny Leong, former Group CEO of JHL Systems Berhad, the largest non-bank acquirer in ASEAN. Today, I have three great panelists on my panel to discuss about Fintech's role in this post-pandemic society. First person I would like to introduce is Mr. Wong Wai Ken, Country Manager of Stashaway. Wai Ken accumulated asset management experience in the investment division of Khazanah and premium China funds management in Australia. He gained capital markets experience in Affin Hwang, serving in both corporate strategy and equity capital markets department. He later gained details experience with the equity market team and successfully helped listed companies and raise equity in Bursa Malaysia. As a country manager of Stashaway, he led the launch of the business by establishing partnerships and marketing channels. Today, as I understand from him just now, that Stashaway is in 5 countries. The next we have is Wong Kam Meng from Funding Society, co-founder and CEO. Kam Meng pioneered P2P financing in Malaysia by setting up and launching Funding Society in Malaysia, being the first P2P financing platform locally. Prior to Funding Society, he specialized in strategy and risk management and worked across Southeast Asia, including Australia as well as Middle East. Last but not least, we have Hak, who's from Visa. He's the head of product and solutions based in Malaysia. Hak comes with 24 years of experience, payment experience, working with large financial institutions based in US, Korea, and Southeast Asia, including the likes of JP Morgan, Chase, and Samsung. He joined Visa in 2010 as Visa Consulting Director for Asia Pacific, and in 2014 transitioned to be Product Director for Visa Korea and Mongolia. Today, he is the head of products for Visa Malaysia, and his key responsibility is to onboard digital partners in the market, small or large, onto the Visa network and to expand access for consumers. Okay, without further ado, I shall zoom into our questions for today. First question, which I would like Kam Meng to help me to start to address it first. Since the pandemic, we have seen the rise of fintech solutions in the market. What role does fintech play in this emerging market? How is fintech supporting businesses? Kam Meng?
Yeah, no, I think thanks, Danny, for the introduction. Maybe I'll just do a quick overview about what we do. So we are Funding Societies. We are a digital financing platform for SMEs across Southeast Asia. So we have operations beyond Malaysia, in Singapore, Indonesia, and more recently Thailand. So in each of these countries, we provide access to financing through both digital and non-digital manner to SMEs of all sizes. So most of the SMEs that we've served, more than 65,000 of them across the region, will be in the micro and small enterprise space. And as I was mentioning earlier, we go to market, or we reach out to these SMEs through both offline and online channels. So I think given the whole situation right now, really it is helping us to emphasize the importance of our online channels in terms of reach out acquisition of the SMEs customer base that we have. I think in terms of how the pandemic situation has given rise to more digital adoption by SMEs is basically through how they have pivoted and explored new ways of running the business. And this creates an opportunity for us to work with partners, whether they are e-commerce platforms, B2B, C2B marketplaces. That becomes a natural sort of way for us to reach out to introduce ourselves and also leverage on some of the data that we're able to tap into from these partners in order for us to provide the sort of provide the sort of access to financing for these SMEs, generally through being able to underwrite and to be able to do the necessary due diligence of these SMEs, obviously with the consent of these SMEs themselves. So I think that really helps to, I suppose, circumvent one of the biggest challenges that traditional financial institutions face when trying to really serve the micro and small SMEs, which are generally just maybe just too hard to reach, right? Maybe too small to serve in a profitable way. And I think digital transformation or the digitalization of these SMEs helps players like ourselves better and more effectively reach out to them. I think recognizing also in this part of the world, there's still a lot of SMEs that are more offline in nature. And I think this helps sort of really bodes well for the industry as a whole from an SME digital financing perspective.
Yeah, I guess one of the so-called benefits coming out from this pandemic is basically people are more into accepting digitization because you can't actually do things offline because of lockdowns and stuff like this. And that can help fintech players like you guys to actually grow. Yeah, thank you for that. Your thoughts on this?
So thank you, Danny, for inviting us to kind of tackle. I want to tackle the question. I think I would echo what Kang has said already. I believe there's the Fintechs role is to kind of bring in innovation to our ecosystem, right? Whether it's payment solutions or financial services. I think in the end, it's about inclusion. I think we know, and Kang has already talked about the underserved and kind of unserved segments that we want to bring into the payments ecosystem that usually consumers at large or corporates at large would have access to, but we do have a segment that do not. And I think it's the role of fintechs and the players within the ecosystem to bridge the gap, basically, and providing these kind of services, especially conveniently and kind of easy access, and especially with security as well. And I think in driving these kind of innovation, but also engagements within, let's say, and connecting businesses and consumers that did not have these the services before prior. So I think especially after the pandemic, I think has given us a chance to kind of look at the ecosystem as a whole and see who we might be able to bring in on board as well. So yeah, I think in the end, it's about opening up the ecosystem a little bit more, and fintechs are really driving around the edges and as an ecosystem as a whole.
Thank you. I guess if the fintech guys are not taking this opportunity, they'll be wasting a very good window to actually proliferate and benefit from the whole situation. Waiken?
Yeah, from our point of view, it's as a business owner, you really have to ask yourself, what value does digital bring to me, right? So I can see two clear benefits. The first is the access and the cost of being served, right? If you wanted to raise funds, if you wanted to invest, if you wanted to understand your business better, digital solutions definitely give you that versus before where you have to rely on your own experience, your own gut feel, right? So I think that's something that business owners need to understand. I think secondly is to, once you already are comfortable with being digital on board, you should look at it as a new channel, not look at it as cannibalizing your existing business. Market in different ways, try different things, look at different channels where you still have your brick and mortar, but you can also do e-commerce to serve a different channel that you would not have reached geographically or in terms of different segments as well. So see it as something exciting as opposed to something that is very expensive, very troublesome. And you can always hire young talent to be able to introduce these things for you as well. So the new digital natives are very used to these things already. So see it more as an opportunity, right? And let's just say we go back to the beginning of 2020. And if you had two fictional SME owners, one will say, yeah, this is nothing, it will pass in a few months. And then the other guy is like, okay, we have to pivot and we have to pivot now. Who do you think is still alive and doing business, right? So obviously, I know it's a very difficult situation, but you always want to be the one ahead of the curve instead of the one who's being too reactive and too slow to respond. And ultimately, that would hold your business in better stead. And trust me, the waves of change are getting faster and faster and faster. Right? When I started here helping people invest online 2.5 years ago, we were the hottest thing. Now we contend with way more things like crypto, NFTs, things like that. So if you don't learn to adapt now, there's no other better time to do it. You have no choice anyway.
With the crypto situation now, then I guess you guys can take the opportunity to get more investors in as well. Thank you for that, guys. So moving on to the next question. How was the adoption rate of fintech solutions in Southeast Asia pre-pandemic and now post-pandemic? Do you feel that there's any acceleration? Maybe this time we'll start with Hak. Do you mind, Hak?
Yes, thanks, Annie. Thanks, Annie, for the question. Yes, I think we all understand that the digital transformation is kind of part of the narrative now, post-pandemic. Now, the innovations that's being offered by the fintechs are being accelerated. So we at Visa, we like to say the pandemic has accelerated 3 years worth of change in the last year. Yeah, especially given our projections and trajectory that we were seeing pre-pandemic, where we've kind of caught up around those numbers within the last year. To give you an example, we saw digital commerce growing at 5 times as fast as physical commerce. So instead of people going to the retail shops, into the physical stores, many more are adopting digital commerce, including mobile and e-commerce, right? And during the COVID era, and I think everybody understands, but the scale of the shift has been kind of quite dramatic and kind of took us all by surprise and given us the ecosystem and especially the fintechs an opportunity to capture some of that business coming in. So again, adoption of the fintech solutions has been very much part of that story. And yes, we see definitely the acceleration. And Visa has been in Malaysia and in Southeast Asia and trying to foster that innovation and to bring in the fintech solutions into the market a little bit faster, a little bit better with some of our programs that we have around in Asia Pacific, things like Visa Fintech Fast Track, as well as accelerator programs in order to kind of nurture and kind of bring in these fintechs on board to leverage our ecosystem and leverage our network.
Thank you. I mean, I love the things that what I always say, the big boys like you guys coming in to help the fintech startups and all to really accelerate and immerse and get into the market quickly. And then kudos to you guys on that. And I guess you guys will be expecting big bonuses since the acceleration has really accelerated. And I guess I shall be looking at the Visa stock tonight. Okay, Ken, if you don't mind.
Yeah, I think adoption definitely helped in this environment, right? So we are in the retail investment space where people if they want to invest, they can just download our app and then put in the money, and then we will invest on their behalf. So as a digital fund manager, I think we really saw the benefits because firstly, I'm sure you remember last year when we went into lockdown, a lot of people couldn't go anywhere, couldn't spend a lot of money, and immediately they spent on e-commerce to improve their surroundings for work home desks and things like that. But after that, what are you going to spend on, right? So let's put the money away for a rainy day, for your safety net, for your future, especially when people are very nervous about the future. We saw a lot of adoption because of that. And the second thing is that in this pandemic, rubber glove stocks really rose very high and very quickly, especially in June last year. So that reinvigorated the retail investor to say, hey, actually investing is a really good way to grow my wealth. I'm at home, I'm bored, I can't go out and do things, so might as well just start day trading. And then they became overnight stock experts immediately. And because of that, some made money, some lost money. And we see people coming to our platform who on both accounts, they're like, I lost money, so maybe there's a safer way to invest, so they choose Stashaway. Or I made a lot of money, now I want to put it somewhere safe and less volatile, then they come to Stashaway. So I think a lot of external events really force people to change their behavior, and ultimately the adoption was really good. So in 2021, we are seeing the continuation of this trend. And because of that, we think that this year will also be very, very strong for us. What we want to do is to introduce new products to help people invest and ultimately be on track for the big events in their life, whether it's retirement, kids' education, things like that. So it's all coming together. And I think with the reopening, people will have that digital investing mindset already. And I think it's very hard to go back.
Thanks for that. I guess a lot of the traveling money, holiday money has been put into investment so that they can travel more further or longer next time the borders are open up again. Kaming, any thoughts on this?
Yeah, I mean, for us, I think it's been a bit of a trickier situation, given that we are in the whole financing lending industry. So I think when the whole pandemic started around 12 months ago, I think the story has evolved since then. I think like what Wai Kian was mentioning, when the whole COVID situation and the pandemic first struck, I think people were just sort of like taking a pause to see, is this going to be something that's going to be permanent, or things will change for good, and how so? And how bad would the situation be before it improves? So I think when we were in Q2 last year, when we first had the MCO coming about, I think a lot of people were like not very sure what's going to happen. And I think there were a lot of initiatives and support that was given out by the central bank and also the banking sector in general in terms of moratorium relief funding. And a lot of the focus, I suppose a lot of SMEs were going through those channels to get the financing that they need to tide through those times. But I think more of late, I would say maybe Q4 and Q1 this year is where people start to accept that, okay, I may need to change the way that I run my business. I may need to explore things a bit more, whether it's starting to sell online, having a more robust logistics infrastructure for delivering my goods and services, suppliers and things like that, buying online. So I think that has sort of evolved more recently, I would say. And I think we've been able to sort of tap into some of the partners that we work with to really leverage on this opportunity to be there when SMEs require the financing to grow their business. So I think that's been the trend that we observe. I think the majority of the SMEs that we serve are actually acquired through digital channels, whether it's through digital partnerships or digital paid marketing efforts. And we look at some of the reports that we've seen is that of late, you see the number of online search volume for SME loans have actually doubled since the beginning of the pandemic until now. And I think that just comes to show that the pickup and the adoption and the need for financing, obviously, from the SME sector in this region.
Thanks for that, Kaming. I can resonate to that. I mean, back in Q2 last year in GHL, so Q1 last year, we actually launched our lending business. Then Q2, because of the pandemic, we actually put everything on ice, just kept it there because we actually didn't know what was going to happen and stuff like that. I can really resonate to that. And I guess today is people are starting to also realize that actually I can actually borrow. I mean, that's the fundamental thing that we're trying to break. People traditionally, a lot of SME think that they can't borrow from a bank. No offense to the bank, they walk into a branch and someone just don't manage them too well. And the realization is that I can borrow, and I think the realization is I can borrow even without seeing anybody. That's the whole digitization of it, and that pleasantly surprised and provided a good feel for a lot of people. Right? Thank you for that. Moving on, this is part I need you guys to help me to convince the listening public why digital transformation is important, right? Many businesses are still skeptical about digital transformation, not like what you guys have been doing, right? I guess you guys can comment on the trend. What do you think about the trend, and why? Why should these retailers or SME adopt fintech, adopt digitization? Maybe I start with Ha again.
Yes, Danny, thank you for that question. I think it's true that, I mean, Kaming already kind of mentioned that, SMEs have been a little bit slower than, let's say, big corporates in terms of digitizing their infrastructure and operations. A lot of it has, could be with the cost, and could be they just don't know where to go and who to work with. I think it's been improving, and they at least they've been forced into this whole digital transformation. But we do see that there's some skepticism for the large swath of SMEs, and I think it comes. So at Visa, I think we kind of see it as there are many things, obviously, but I think we see it as maybe two things that we need to address. I guess one is, the question around, will the digitization really help their business, right? Are they going to bring in incremental business to them? And I think it's one of those. The COVID has kind of shown that there is acceleration, there is opportunities, and with the whole digital transformation, because again, it is growing so much faster than the physical stores. The fintech solutions that we're kind of talking about will help them to locate kind of new businesses, new customers and incremental business to the ecosystem and to them. I think that's one of the things that we do need to be very mindful in our narrative, especially with our SMEs. So even at Visa, we're trying to enable the SMEs into coming into the ecosystem by doing things like Where You Shop Matters programs and campaigns and platforms, so that they find the e-commerce enablers quite easily and take advantage of some of our offers that they can take leverage and find customers where they might not have been able to do that before. I think the second one is around some security. So is the payments kind of the operations going to be secure when they go online? I see a lot of stories where things are not, there can be some phishing, there can be security issues that people, which whether true or not, there's some skepticism around that. And I think, especially for Visa, we kind of pride ourselves in being a leader in securing digital commerce as a whole. So I think we want to make sure to address those concerns head on and get our fintechs and enablers to spread that message across our SME, so they do feel comfortable in kind of enabling their operations on the e-commerce and mobile commerce as well. Yeah.
Thanks. I mean, I think you got a spot on there, especially on the point on security, right? I think traditionally you probably have your bank acquirers and all to help you to disseminate that comfort feel, right? But today you will have all the other fintech so-called partners to help you to disseminate the same message over and over again, and then hopefully people get that comfort over time. Over to you, Kaming.
Yeah, I think I agree with the point around the trust and the affinity that digital financing or any kind of digital solution, I suppose, that is foreign, right, or not familiar, the local industry might not be familiar with. So getting a phone call and say, okay, we are funding societies, would you like financing and things like that, is a lot harder compared to say, oh, I'm from so-and-so bank and we're offering financing. That's a lot easier. Even though you are the one who's actually giving the financing in this situation and you're not actually asking for money. And I think the trust and affinity is very difficult to build if you don't have the right level of branding and awareness and education. But I think maybe and that was one of the challenges that we faced earlier on during the COVID situation. But thankfully the whole situation has sort of evolved, and I think people are more willing to sort of explore as the whole situation is not going to go away anytime soon. But maybe on the point on why some SMEs are skeptical, I suppose it depends on the digital transformation that we're speaking about. So for example, if it's just starting to buy online from online suppliers, if it's starting to sell online, I think those kind of transformation are generally almost free, notwithstanding the fact only that you need to educate yourself how to do it and get someone to maybe monitor. But there's so many solutions out there that even helps you to sell online these days, right? Aggregate throughout multiple e-commerce platforms and whatnot. So I think that the barrier to entry for those kind of digital transformation probably would be quite low and quite sort of risk-free, or it's a bit of a no-regret move, right? It doesn't work out, then you basically move back to your old way of doing business. I think where probably the largest skepticism would be where there is some kind of capex or large investment of dollars and time. For example, in terms of your manufacturing line setup, automation and things like that, of how your entire business model or how you deliver value. I think that part of the business, probably the digital transformation on that side, would be a bit more challenging to pull through, especially in the COVID pandemic situation right now, whereby it is more uncertain in terms of the payoff to your this sort of investments, right? Because you don't know if there's a market out there, if your customers will be able to pay you and things like that. I think that was probably the largest skepticism around the digital transformation. So I think some of the questions around, so it really depends on what kind of digital transformation that we are talking about. But I think, and hence splitting those two into like sort of no regret, expand my market, expand the target segment, my delivery channels. I think those things we have seen. But I think where it comes to like bigger ticket investments, changing your manufacturing line, things like that, I think that's where the skepticism still exists. And I think it is for good reason, because of how uncertain the economic environment is.
I mean, yeah, rightly pointed out. I mean, as much as we always think that this pandemic will help with payments, help with fintech to accelerate growth, right? But it's also created a lot of other skepticism, right? I mean, I totally agree with you on awareness. I mean, I remember in 5-6 years ago when GHL started acquiring to small merchants, providing payment service, people, as opposed to traditionally a merchant gets it from a bank, they say, who is GHL? You know, at least you guys are giving out money. We actually keep their settlement money and pay it back. So it's like, can we trust them, etc. So but it was a long cycle. I mean, like you guys today, GHL is much more established. But I guess the point here is also whoever does any of this new initiative would probably need to remember that it's a long play. It's not, digitization is not something I do today. You know, I'll set up a factory today and I'll reap benefits. It's a long play. But to me, from a cost perspective, from a reach perspective, will always be able, is a better play for a long run. So it's very strategic in nature. Waiken, any thoughts on this?
Yeah, so my initial reaction to the question was people don't have any choice, right? But then I think that might be a bit one-dimensional in terms of that thinking. I think people need to be incentivized. So I think the first thing usually when people get attracted to the idea of digital is they get to save costs. So if I get to save costs, I get to hire one less person, have one less physical location, then it's good for me, right? But then if you extend that idea to you actually get more insights from your business, so you can actually get to be a better business person. And then you can actually, like I said before, you can actually look at new customer bases and think even maybe beyond Malaysia. That might actually move their thinking towards the digital future, right? So for example, I think a lot of entrepreneurs think they are very good business owners, and I think they make decisions based on their experience, their gut feel. But then if you actually couple that with data to actually understand your margins, understand where you can optimize costs, I think that really helps you become that new generation of business owner, right? And in terms of new markets, it's like you say, it's a long game, because it's not like I put in one digital plugin and everything works, right? You need to understand what digital marketing is like. You need to commit a budget towards that. And you need to then, after that, optimize for your digital marketing as well. So you need essentially to make that investment from people who are digitally native employees and also systems. So all in all, it's really a journey, and you need to commit to it, right? But once you commit, really, it's the benefits are many-fold. So for example, you know, when coming back to my world where it's all about, you know, investing, typically people will see their unit trust agent happily, or maybe they are ignorant of the fact that they pay 5% sales charge and 2% management fee, 7% in fees. Then they question themselves, well, how come my money doesn't seem to grow? So now with all the digital platforms that you can use, from Rakuten Trade to Stashaway to all the other digital options out there, you're really reducing costs, like your business as well. You're going in at a fraction of the cost. We only charge 0.8% on your management fee, no sales charge. But you also get to see much more in terms of where we invest for you, what your risk you're taking, the performance over time. You can see all that with ease. Unit trust platforms, they're fine if you're face to face, but then not all agents are good. Some of them kind of rely on people with more money. And then also, if you look at their online interface, I can tell you it's really bad. You don't really know what you're looking at. You don't really know what you're investing in. You don't really know how much fees you're paying. So I think that whole transparency and intelligence when it comes to investing is the real differentiator. But at the end of the day, it comes back to, do you really have a choice? Sometimes there is no choice. You have to commit to it. But once you do, it's actually people adapt very quickly. Right? I find out even you probably take like a mindset shift a little bit, and then you can already understand how to run your business digitally or through a hybrid.
Thanks for that. I mean, totally agree. I mean, say again on cost, right? To me, I always tell people, how much cost can you reduce, right? I always focus on growth, right? So digitize not just to reduce costs for your existing costs. Digitize to have a cheaper option to grow. Like what YK is saying that when you can bring down the sort of fees rate to bring lower through digitization, and that actually is going to be your USP to grow. Do it that, but don't do it to basically I want to lay off 20% of my staff and I digitize. Because yes, you can do that, but how much more can you cut? You can't cut everybody to 1%, right? So key point. Thank you for that, YK. Next up, Southeast Asia being a multicultural region. From your experience, what are the key challenges a fintech player face to expand into this region? YK?
Yeah, thanks for that. Yeah, I think people that come to Southeast Asia and say that, oh, the region has 500 million people and it is poised for growth, I think if they don't follow that up with a very intelligent point after that, I usually discount whatever they say for the next half an hour, because they don't understand that it's a patchwork of countries with different languages and growth rates and also politics. And to go into each country is you cannot have a blanket solution to it all. So I can only speak from Stashaway's own experience. We are in Malaysia, Singapore, Thailand, and Hong Kong, which is in the Southeast Asia region, and also Dubai, which is in MENA. So each country comes with investor preferences are different. They have different choices. They have different levels of savvy. You can say something about like Malaysia, maybe not as sophisticated about Singapore, and Thailand, maybe not as sophisticated as Hong Kong, right? But that is fundamentally different. The choices they have is different. The second thing is the regulatory framework. Different countries have a different speed of tech adoption. We are very lucky in Malaysia that the SC had an agenda, and the agenda came from serving SMEs to serving investors, retail investors, to then looking at external factors like cryptocurrency and things like that. So it's a very well planned, well executed, and also they're proactive in terms of how they responded to external events. So that's the second thing. Ease of doing business in a regulatory framework. And then the third thing I would say is your competition. In each market, there are different factors of competition. You have the incumbents, like the banks, like the unit trust agents and all that. And then you also have the strength of your digital competition. So we think in Malaysia actually that the incumbents are very, very strong, but the digital competition is less strong, because the digital competition is actually not as well funded as us, or not as the product is not as innovative as us. But in Singapore, on the other hand, it's because of the talent hub and the financing that they have, the access to different markets. Our competition there is higher. So these are all the different things that you need to ascertain before you want to do business in a certain country. But our true North Star, our true mission is really, can we make our clients or customers' lives better if we come to the market, right? And naturally, from a business perspective, do we think this market is big enough, right? So can we solve a problem? Is the gap really, really big? I would argue in Malaysia, it's massive. And the market is also equally massive. There's 770 billion just in cash alone. There's 300, 400 billion in retail participation on Bursa Malaysia. And also there's 500 billion in unit trusts, right? So for us, that's just a market size of how big things can be. And as of last year, 2020, the SE released the numbers that robo-advisors manage 600 million and in people's money. And we take a commanding lead of that 600 million, but that is nothing compared to the big billions and hundreds of billions of numbers that I just quoted. So we're very excited about all that future growth, and but we're very wary that a lot of localization needs to be made to really, really make an impact in our customers' lives in the different countries.
Thanks for that, Waiken. I mean, the thing I always tell people as well is like, yes, looking at the Southeast Asian market, 600 million, 650 million people, right? Very nice melting pot and all, but it's not homogeneous. It's nothing close to homogeneous. So, I mean, well, all three of you would, I think, agree with me on that. Coming, any of your thoughts? Please share your thoughts.
So I think concur with the points that Waiken was mentioning earlier. I think probably it is a very challenging piece to solve, and it's going to be an ongoing piece. And I suspect that's probably one of the reasons why the SME market is so underserved, because not only you have to solve it for one country, you have to solve it for every single country, which is a bit different. And I think although we have things that are generally aligned across the different markets, but the detailing it and the localization it and ultimately what you put in front of the customer, that part is the painful part. And I think what we have been able to try to address it, I think strategically from our side, is basically from a technology perspective, from an infrastructure perspective. And even then, at that level, given like a tech native player, you still have to make some trade-offs in terms of what are you going to localize and what you want to standardize. And I think the reason is because we also don't have unlimited resources, like a financial institution or a big corporate, whereby you can have a big tech team and then you can develop the most flexible and extensible solution that can just plug and play, and you can change anything and you can in your machinery. I think that's the ideal state, but I think as a reality, if you're a fast-growing startup in the tech space, you are always in some sense playing catch up, right? So, and you want to tap into the market opportunity, and that's where the trade-offs become more apparent, because there's not only the resources, there's also the speed at which you're trading off. And I think this is where then it becomes a lot more challenging when it comes to delivering a very localized proposition for the local market. So I think in terms of what Waiken was mentioning, in terms of behavior, right, in terms of market opportunity, it's all different depending on where each country is, right? So for example, Singapore and Malaysia and Indonesia, although we're neighboring countries, the competitive landscape, the level of digital adoption and the market opportunity as a result is very different. Naturally, we see Indonesia being more tech-driven, being more digital because of the leapfrogging that we observe. Singapore has always been very strong. The banks are also very strong from a digital proposition, so that's a smaller place to play. Malaysia is somewhere in between. So I think hence the challenge, and I also think that where the opportunity comes, right? So that's why you don't see a very strong dominant bank or FI that's strong in all countries. Usually they're strong in maybe one or maximum two countries, but not strong across Southeast Asia, for example. And I think that really shows the challenge, right, in terms of adopting those different like products, processes, risk management in the different localized markets.
Thanks, I mean, actually, you rightly pointed out that you don't actually see any big, really, really big, truly regional Southeast Asia player, even the banks or even the insurers, right? Aside from the multinationals, aside from people like Visa. Let's see what Hak has to say on this. Hak?
So thanks, Danny. I think my colleagues have kind of covered many of the answers in detail, so I won't go through that. But I'd like to echo one point, which is on regulation. I think, the way Visa has been working with fintechs across AP. Some of them are tend to be regional as well, and the key challenge is always around regulation. The differences in regulation and the approach, the regulatory framework around payment and financial services is quite different. I think I can already kind of alluded to that in his comments. We know that cashless agenda is across every market. Everybody has some form of cashless agenda, but the approach can be quite different. And data usage, open data, the whole the flow of data can be quite cumbersome and quite different, and can introduce costs and barriers of entry for a lot of the fintechs in the market. So I think that I would say that is the kind of the key challenge in, as you said, Danny, it's not homogeneous. Every market has very different approach, and it's been a challenge in kind of making sure the core competency of the fintechs translates across the markets. At Visa, we don't do the business ourselves, but we've been helping, through our local market fintech leads, as well as our government engagement at Visa, the team at Visa, to kind of try to navigate some of those and get them on board and launch new businesses in these markets. So I think that's one key thing, one key challenge that we've seen. The other one is around, I guess, especially around scaling. It's the kind of the what's been successful in one market might not be in terms of business models and strategy. I think, and trying to localize. I know Kameng already kind of mentioned that localization of the services and the solutions becomes quite critical, and kind of goes in hand with the regulation piece that we already talked about. So I think those are kind of the areas that I would like to highlight. But I obviously it's kind of I'll defer to the people who've actually done it. So I can and Kameng, who's actually done it in our markets. Yeah.
Thanks. I mean, from my experience on regulation, good point on regulation, but to be fair to the regulators, at least from a payment perspective, they have actually across the region, we're looking back at 5-6 years ago, they were all in different pace and a bit everywhere, right? Today, I see them talking to each other, not only today, 2 years ago, right? They start talking to each other, they start synchronizing some of their efforts and stuff like that. So you actually, they have woken up and they actually responded to the market, at least from payments perspective, very well, and I give credit to them for that. Because traditionally we always think that regulators are just slow and don't do anything, but from payments I did see that they have done quite a fair bit in the last few years. So thanks for that. Okay, to wrap up our session, basically I wanted you guys to share what's your vision of future of fintech. What are the trends that you may foresee in the future, whether it's within your own area or anything in general? Just to close off.
Yeah. Well, thanks, Danny.
Kameng? Yeah.
Yeah. Thanks, Danny. So I think if we look at any kind of evolution or adoption curve, generally it goes in different phases, right? S-curve. And I think the COVID situation is more of an extraneous factor that shifts the curve up. So whatever normal adoption level of adoption pickup that we observe, we should expect even greater now, given the whole curve is going to be shifted up. So I think generally that's what we expect to happen. I think the silver lining to this is basically that, like what Wei Ken was mentioning, there is really no good alternative and really no good reason to not explore digitization for your business. And I think that bodes very well for sort of digital financing providers or digital fintech players like ourselves here to tap onto that. So I think basically being able to sort of reach out to these SMEs or individuals more effectively, I think that's one, in a much more cost-efficient manner through paid marketing and things like that. And also, I think more relevant, more pertinent to the lending side is basically being able to demonstrate or share data that proves your creditworthiness. Because I think one of the big challenges of the financing market is basically that if you're a micro and small enterprise, you may not have a very good bookkeeping. You may not know a lot of these debits, credits, accounting, and you may not have any kind of financials if you're relatively young, right? And how do you want to prove it to a financial institution to provide you financing? And I think this is the other shift that we see in terms of digitalization of these data points, track record, and creditworthiness. And I think this is something that we are quite optimistic about as well. So it's not just being able to reach them in a cost-effective way, but it's also to be able to underwrite them so that the whole industry is one that is sustainable over the longer term. So I think these are probably two things that I foresee in the near future. And I think that's the silver lining of the whole current pandemic situation.
Thanks, Kami. I mean, I agree with you on the credit worthiness. I mean, I still feel that as you proliferate going into deeper markets that are underserved or unserved market, you don't know anything about them. It's not like people like us with a credit card or whatever, right? So, and I actually think at least across Southeast Asia, there's nothing there. And I think the collective data points that you say is going to be from all these fintech players like yourself, Stashaway, and all this collectively. And maybe someone should put them all together and come up with something. Okay, over to you. What do you see the future like?
Yeah, I think, just to kind of encapsulating everything that we've kind of talked about, I think, technology is becoming kind of an integral part of, everyday consumers' lifestyle, especially around digital commerce and financial services. Everything is kind of being done on mobile, and easy access, convenient access has become the key kind of differentiation, post-COVID. And I think it'll continue to be that way. And I know consumers, through research that we've done, we know that they'll stick around. They'll stick to, digital payments, digital financial services. It's not just something that, that'll come in fashion and, then go away. Actually, it's here to stay. I think that's the biggest kind of shift that we're seeing. And that's where we think Future has a huge opportunity. Fintechs will have a huge opportunity. The other opportunity, I think, is around SME. I think we kind of talked about that as well. And part of the opportunity is going to be around, because not everyone is on digital journey yet, right? And especially around post-COVID and post-pandemic, the path to recovery, getting them back to work, getting the businesses and the consumers and connecting them and growing that business, I think is going to be quite key. And kind of, making sure the fintechs and the enablers and the ecosystem as a whole support the SMEs in that journey to kind of shift to digital commerce. Again, I think we talked about out of necessity almost, right? But also to help them in their overall business and then for them to grow beyond what the post-pandemic era. Which includes, not just payments, but also, financing, lending, cash management, and all this that's related to running a business. And I think that's where a lot of the fintechs can offer solutions in the future.
Thanks, I totally agree. I mean, I truly believe all this digitization that we do for the SME or the consumer is here to stay. I mean, pandemic basically helps to accelerate things, but looking at humans' behavior, but usually they say you do it for 3 months and you cannot embrace it and stuff like that, right? So we are more than a year into the pandemic, right? Only thing that I hope that we do not have to embrace is continue wearing masks or social distancing after all these things that has been resolved. Thank you, Ha. Waiken?
Yeah, thanks. I think it's the wealth management game is simple in some sense. Everyone wants to make money. I think what changes is that where do you help us make money, right? And there's a lot of new options, new flavors and fads that are out there, which you can either fall prey to or take advantage of. So when we launched 2.5 years ago, people really wanted to invest overseas because Malaysia's stock market was actually very lackluster. But then people wanted more internationalization of their portfolios. So that's where our ETF portfolios came about. And then now, 2.5 years later, they're like, okay, what else is there in the international arena that I can really make money from now that I'm used to this Forex risk and all these different ETFs? on different asset classes. So now big trends are things like ESG. I want to do things in a more sustainable way. We are studying that, whether does it really make you more money or not, right? But we really want to look at that in a practical way. Second thing is more access to sectors of the future, whether it's health or biotech, whether it's crypto, whether it's things like tech and even tech in China, for instance. More thematic kind of plays are things that people are looking at. So that's the cutting edge. And then you got the bleeding edge, which is more like a Pandora's box of things that are not really that regulated. They're safe, but they're not regulated. They're just super volatile, like the crypto world. There's so many coins and altcoins and tokens that are really, really innovative. And what they are trying to do is to prove that the technology works. So that one is really, really bleeding edge stuff. And personally, I think that people should build their investment portfolio like they build their house. You have good fundamentals, you have good multi-asset portfolio, prepare yourself for retirement. And then if you have a little extra, then you do some renovation. That's really where you invest in the bleeding edge stuff. So yeah, think carefully, and then keep abreast of the innovations, and then invest in for the long term and also over time. Right? Don't go all in one go.
Thanks, Mike. I totally agree. I mean, I think the other thing I would like to add on is basically, as what you told me earlier, that especially you started launching your insurance product as well, right, in Singapore. So to me, the way I look at it is, like I mentioned earlier, all the fintech players, upon being successful, and it won't be working in silo. I think it's how you want into quote unquote attack or acquire your base, right? And upon that, how to make sure you maximize so-called interaction with your base and cross-selling products with each other's base, and actually then you can truly get them more fully embedded or fully into this whole fintech and digital world, right? So with that, gentlemen, thank you so much for spending time with us in this conference. And on behalf of the team, I'd like to thank you guys once more, and stay safe, take care, and we catch up physically soon over beers or something like that. All right.
All right.
Thank
Thanks,
you.
Danny. And thanks, everyone.
Bye-bye.
Bye-bye. Thanks, Danny. And thanks to the Data team.
Thank you to our moderator and panelists for the great discussion session.